What's up, guys? Philip at Trade Genius. All right, it's the new week, so we're going to take a look at the weekly and daily chart on Bitcoin and see what levels are going to matter there. We'll also take a look at the Parabolic chart and see how that's shaping up. We'll also take a look at our market internals again and see what that's telling us. We now have some actionable levels on the Fear and Greed Index, so we'll discuss those in this video. We'll take a look at the Tether chart, discuss the gap chart on the futures. We'll discuss price relative to the Chinese yuan, and we'll discuss the monthly RSI. All right, guys, let's get into this video.
Trade Genius.
All right, guys, let's dive into the weekly chart. Technicals have topped out and rolled over a bit, but currently not in any extreme reading. This last weekly close here was pretty bullish. We basically recovered from these lows of 9,073 and closed green for the week. So that was a pretty bullish reversal there. Again, this was going back to levels from where the Libra coin announcement kind of started this last final leg up on this current move, rolled over and retested those levels that basically it launched from. So we've round tripped that entire move and subsequently bounced. So now we're getting into kind of this range bound trading, which I was expecting to see, was just that we completed this move from the Libra announcement first. So now we're getting into this behavior that I was expecting to see, which would precede a move then out of this range, but we'll get into that here in a little bit. For the bulls, really, this is going to be about getting back above 11,000 and getting a weekly close back above 11,000, as well as a daily chart. A bigger picture on the weekly, we're looking at a fib range here, which currently we've pulled back to the 382, actually went through that a bit, held this block here that I was looking at off of this candle, weekly candle. So that seems to be on par for bulls holding this move. So for this fib range, we're looking at an extension up here at 16,325, okay? So that would be, I think, the destination, final destination for this move. And then we're going to see how this plays out and see if this ends this entire move and we take a break from there or we consolidate. We'll take a look at that level, but that's, I think, where if we can start clearing back above 11K, I think that green lights that level up here. So basically be from 16,000 to 17,000 in that area. On the bearish side of things, we still have this larger fib level. So this goes from our all-time highs down to the most recent low of our bear market in December. And so we've, again, these big fib levels will not give up without a fight. And you can see there's been a lot of movement into that, but ultimately the bears defended that level on this first go around. Obviously, if we get back up into this area, that's going to be pretty bullish, and that's also something else that we'll be expecting to see if we clear this 11K level again. This would be the next key area to key in on, this sub 13,000 level. All right, let's take a look at the daily chart. So you'll notice here after we pulled back, we bounced off this level and kind of went sideways a little bit here. We're dipping a little bit here. As long as this holds here, I expect this just to continue chopping, and kind of similar to what we see back here. So we had our move up in the range, it pulled back. You get a little bit of chop. This has been pretty par for the course before leaving these areas of range that we've seen. You get some sideways action, and then you start marching out of it. And we'll look at that more on the parabolic chart. So we're starting to see that bit of a sideways now that we've finished off this area here up and down. So we'll look for this range to hold. But again, if we cannot, 11,000 has rejected over the weekend. So that has to get reclaimed. And I don't care if we chop a little bit, but if this does not get reclaimed fairly soon, then we could see a rollover. And something for you bears to keep an eye on. If this goes down, then we could be looking at this lower fib level of this range here down at 8,095 or so. That would definitely close that gap on the CME, but we're not there yet. Right now, we're just, as far as I'm concerned, this is just consolidating in a range, but getting a close below 10K on the daily would be pretty bearish at this point. So that's basically for the week ahead. It's all about the 10K and 11K levels. If we're anywhere in between, that's just consolidation, and that would be interpreted as bullish just because of all of the previous ranges have been consolidating and then marching out of that consolidation toward the end of those ranges. Another thing I want to look at is the monthly RSI. Since we're here, let's just take a look at that real quick. All right, so this is the monthly RSI. Something just to be aware of is that, whenever we get a move up to these levels, so right now we're at 65 as of last month's close, and this will get updated here on the next month close. But we'll notice that typically when you get these levels, you're seeing, once you get up to these levels, that's the start of a larger move, and you get these, extreme readings up into the 90s. Okay, so we haven't seen where Bitcoin just stops and then doesn't continue this trend higher. So we should be well into a bull move ultimately that we'll see these 90s. Now, obviously, this is a monthly chart, so this is going to be a longer term play out. When we came out of the 2014, 2015 market, we did get up to these levels and pulled back for a bit from June to August. So it would be perfectly normal to see a couple month pullback or slash consolidation and go higher. But I think this is and follows with the halving cycles that we're well on our way to making new all-time highs on this move. So we're nowhere near anything that tells us that we're at hitting like a major top on this current bull move. All right, let's take a look at the parabolic chart. Okay, guys, so obviously we've talked about having our basis of consolidation. So base 4, again, we're looking for here is that consolidation on the daily. We're kind of looking at like we saw in base 3 and toward the end of base 2. So really, guys, the key here is going to be clearing 11,000. So if we see a daily close above 11,000, then I think it's safe to say that we're starting to leave this area of consolidation, and then we get another thrust up, and this again would take us toward the 16 to 17,000 area, which is this red line here. If it blows off and you get just a parabolic move and gets into that range of 3.4, that fib area, which is historically when you see the 3.4 moves, those are the end of the moves for a long time, and then they consolidate out, then that would probably mean that that's a top for at least until Q4 or this year, Q1 of 2020. And that would still play into the halving cycle. That wouldn't be a bad thing. It's just that this thing, got ahead of itself quite a bit. But again, this week, it's all about holding 10K or breaking 11K if you're that's the bull bear scenario. All right, let's take a look at the internals. All right, guys, so the internals, again, you'll see this line in the sand here, just north of 11,000. Again, that's going to be key. Internals, basically, they've been, if we look at the funding rate, okay, so this is, if there's more shorts, then the funding rate goes negative because the shorts have to pay the longs and vice versa. So this just shows you kind of where the trade is crowded. Nothing extreme here. A lot of these moderate negative readings have been in areas of chop and bottoms. What we're looking for here, guys, on the funding rate is to see it flip to the positive. And then, but we need to see a break. The first break we want to see back above here would be 10,650 this week. And if we can get back above that level, right now we're at 10,230. We had a little dip here. If we can get back above 10,650, I think that's probably going to open the door for another crack at 11,000. A daily close above 11K, though, is key for right now. But nothing extreme on these readings. Again, I think this is, especially on this move since up from December, these areas of negative to flat have been consolidation and then break higher. So that opens the door for that move. As far as the long short exposure, shorts are starting to creep back up here. Longs have been fairly steady. Shorts, as you know, have dropped off on these areas where we've seen, like, I guess, big hedge positions taken off, and ultimately that's created weakness in the price action. Haven't seen that, and we are getting a little bit of uptick on that. If this grows quite a bit, that usually gives us a lot of fuel for a short squeeze, but nothing extreme so far on the internals here. So again, I think that plays into more of a consolidation type scenario. Let's look at the crypto fear and greed. So we had a reading of 42. Let's go scroll and look at the chart. All right, so the chart, we saw a low reading on the July 15th of 16, and then another dip on the 17th of 19. So 16 and 19. So these are areas, especially the 16 level. My rule of thumb back in the bear market was anything below 16, we'd wait for a move up, and then you'd go long that, and that was a very good entry system. Again, with the bull market, we were looking for, okay, what's our high-low reading? So I think now we've got excellent high-low readings. If you look on the 15th and the 17th, where we had these two lows, so here's the 15th, and then here was the 17th. 17th was the low. Interestingly, we had a higher fear reading than we did back here. Now, the thing to keep in mind with the fear and greed is that those values print about 4 hours after the daily bar opens. So you're not getting the full day's action when those print. It's more about like the second or the prior day more than the current day. So when that 15th printed that low, that was because of this big bar here. So this bar closes 4 hours later, you get that fear and greed reading. And we did get a little bit of a bounce. We did make another low, but that was what was weird, was that this low here then created that 19 reading of fear. You would have thought it would be lower, but it wasn't. So that was something interesting. You actually had a bullish divergence with regards to the fear and greed levels. And then this thing moved back up, and that was the local low there off that. So those areas now I think are a good signpost for what is a bounce area, just like up here was a good area in those 90s for a top area. Okay, so that's what we were waiting for. I think now we have got a nice gauge for the bull market on the crypto fear and greed. All right, let's take a look at the Tether cap. All right, guys, Tether cap still grinding higher. Even though we're stuck in this range right now, that's okay. That's what happened here. We were in this range. Notice, this move down here to 76.98, that looked pretty bearish. And Tether had pulled back and then started going higher again. And then there was a couple more days of consolidation before the move out, taking out this prior high. So you kind of want to see that here. Tether pulled back a little bit and is looking to bounce a little higher. So again, the key here would be breaking that 11,000. That's the reoccurring theme here. But that's going to be a big level to confirm that, yeah, it looks like we're going to break out of this fourth base of consolidation. But the Tether cap not indicating that money's coming out of the system. It's still, our moving average of this is still grinding higher. As far as CME gaps, no real gaps over the weekend. Again, this 85.15 is still there, and that keeps coming up in conversations. One thing a different perspective, guys, if we go to a 2-day chart, there is no gap. A lot of these gaps that fill even after a while are visible on more than just a daily chart. Like you can go to 2-day or 3-day and they're still there. So just interesting note there. Gaps don't have to fill. It's more of a self-fulfilling prophecy. Traders will start eyeballing those levels when they start getting down there. That's why this move here, I think, off this daily candles was pretty bullish, because usually you get to within proximity of the daily close or the gap, you'll see that just that final capitulation move to close it, and the bullish demand was high here. So I think I look at that as pretty bullish. But again, you got to be adaptive. So if 10K doesn't hold, then you have to look at this coming back into play. So we're not out of the woods as far as the gap fill. I just don't think that north of 10K it's a likely scenario. All right, last but not least, let's take a look at the Chinese devaluation line. On the daily chart, you can see just it's been ranging, and Bitcoin, kind of has been surging up and down, but like big picture, it's just been kind of sideways ranging. It topped out, pulled back a little bit and ranged. So if we get more devaluation and this thing spikes higher, that's going to be more fuel for the Bitcoin fire. So I think this in combination with the tethers is kind of giving the fuel to this current move. But so we'll just keep eyes on it. As far as the lower time frame stuff, again, this does, I think, on the 4-hour affect Bitcoin's moves. But again, we just really have not seen. There's not a lot to glean from this, up or down. So if we do see a larger move one way or the other, we'll do an update later in the week to give you guys a heads up. But otherwise, this is just basically saying more sideways. Tether's giving us more of a clear indication that the future price action is going to be up. All right, guys. Well, that's it for this video. Again, I think big picture, it's going to be about holding 10K or breaking 11K. And I think that move, that daily close below or above those levels is going to dictate where this is going. Above 11K, resume the parabola. Below 10K, possible gap fill. All right, guys, that's it for this video. I appreciate you guys watching. Please hit like and subscribe. If you have any questions or comments, leave them below and we'll get back to you. And I'll catch you on the next video. Take care, guys. Bye-bye.
Trade Genius.